To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Welcome to the next chapter, security analysis. Before we actually get into what is security analysis, what are the contents, components, all of that, let us keep that aside for a moment. I am sure a lot of you must be watching these business channels like CNBC TV 18 or CNBC Awaaz or Z Business, okay? Or some of you might be reading these newspapers, financial newspapers like Economic Times or Business Standard or Financial Express or Mint, right? Or some of you might be watching, podcasts or YouTube channels. There are quite a few YouTube vloggers who actually give out information on, their views on what is the stock that you should buy, what you should sell. Or some of you actually may be receiving SMS tips on your mobile phone, right? Which says, buy this stock today, it will double, it will triple or something like that, right? If you are not doing or if you are not aware of any of these, I strongly suggest that you start watching these business channels at least once a week. This is very important for you from a career perspective and from a knowledge perspective to understand what is going on in the economy and how is it affecting the markets and how it in turn is affecting individual stocks or their prices, or it can be stocks, it can be their debt securities or whatever. It could be any other financial instrument. Okay, it could be any kind of financial instrument. How is it affecting currency? How it is affecting interest rate? How are things getting affected, in terms of their government bonds? So any kind of security, right? Any kind of security, how is it getting affected by various market conditions, various economic conditions, various global factors, various industry factors, so on and so forth. All of that are discussed. All of that are discussed in these business channels. I won't say they will go very deep, but they will definitely go to a certain extent. They will explain in detail, especially for a student of finance who is not aware of anything. It is a very good starting point. So if you are not following any of these, I strongly suggest that you at least watch this channel once, any channel, it doesn't matter, CNBC or Z or whatever you're comfortable with, right? Watch it for probably an hour or 2 hours a week. And please read at least minimum one financial newspaper. It could be any newspaper. You need not read the physical newspaper. If you want, you can read online versions also. Or please go to a library and please start reading. Because it is very important as a student of finance that you are fully aware of what is happening in the market, what is happening in the economy, what is happening in the world, and how does it impact various things in and around us. If you watch any of these channels or if you read any of this, you will see a lot of analysts who come there, or a lot of senior government people, or people in markets who have been there in markets for 10 years, 15 years, 20 years, or research analysts or economists and so on and so forth. A lot of people come, and in fact even company CEOs, CFOs, they all come and they all talk. What is it that all of them are doing there? They all are giving some view. What do you mean by view? If an analyst comes, analyst says, the entire auto sector is doing very bad, all the stocks are getting beaten down, there is no sales happening. An analyst, when the research analyst comes, he or she comes and makes statements like this, right? What are they all trying to say? They are trying to tell underlying causes or underlying information based on which the financial performance of a specific security, please mark my words carefully, security. I am not referring to just shares, because financial security includes shares, bonds, and any other such finance instrument which is traded in the market or which has a price which is determined in the market and which people exchange. It could be a CP, commercial paper also, okay, for all you know. Right, so it could be any financial security. So when these, research analysts or companies or people who come and talk, they all are giving their view saying that, this is what is happening, and hence this is how this financial securities price is going to be impacted. They are giving all the reasons and saying this is how it is going to get impacted. Based on that, all these business channels, they come out with their view. So this price is going to go up, this price is going to go down. And if you go to any stock broker's office, right, anywhere, we can be in any part of the country, you go to any stock broker's office, there you will see a lot of people, with big screens watching it, and then they will say buy this stock, sell this stock. So everybody is taking decisions based on the information that is being put out in these business channels. It could be newspapers also, it can be, you go to SEBI website or BSE, NSE website, companies upload their information. Based on that, people take decisions. Or earnings come out. That is, people declare their quarterly results, Q1 results, Q2 results, annual results, or there is information with respect to, somebody has made an acquisition. So all this information comes out. Based on that, investors like you and me take decisions. Now, all that information, just based on the information, we don't take a decision. We process this information, analyze it. We analyze. There is information, there is analysis, there is decision. In this particular chapter, we are going to talk about this part of analysis. We're going to talk about this part of analysis, which is there is information that is coming or information that you look out for or you search for. Then you analyze or process that information so that you enable decision making. So the process is information, analysis, decision. We are going to concentrate on the middle part, which is analysis. So this security analysis is basically analysis of all the information. Analysis of all the information and the potential reward or return that accrues, potential reward or return that comes out, okay, by investing in a security based on all this information. So let us take an example. Let us say Reliance Industries. Let us say Reliance Industries comes out with phenomenal results. And they say Jio, is contributing very well. Jio is, giving us a lot of revenue. There are so many subscribers we are adding. All that is information. You have to analyze. You have to analyze and see, oh, Jio is doing very well. This is what is going to happen. So the earnings are going to go this much. Today the EPS is X. The EPS will, in 2 years, EPS will become 2X. So today price is Y. So where can the price go? So will the price move from Y to 1.5Y or 2Y or 3Y? Where can it go? So based on this information, you arrive at the probable EPS or some such number. And then based on that, you say, this is where the price can go. So the analysis part is understanding the information. And what is the information here? Just results. And in that result, they said Jio is doing very well. And they gave some numbers for Jio. Last 4 quarters, we have got this many new subscribers or something like that. They gave some information. Based on that, you are projecting the EPS. Based on that, you are saying the price will go up. And then you are taking a decision. What? Reliance Industries share now should be purchased because in next 2 years, EPS is going to grow. If EPS grows, the overall share price will grow. Why will it grow? We have all discussed this in FM, in CA Inter. Okay, we will come to that again. But nevertheless, if company is becoming more and more profitable and EPS is growing, share price will also grow. Right? So this analysis part is analysis of all the information, understanding all this information to arrive at a potential decision. See, all this information is what information? Price sensitive information. Information is not just any random information. It is not that, Reliance today opened the office, today closed the office, today, they put a yellow board, blue board, all that is irrelevant. Price sensitive information of Reliance or any company or any share or security, or it can be not only share, as I said, it can be debt, it can be CP or anything like that also. Price sensitive information that impacts any financial security such that the return and the risk profile of the financial security changes so that, and because it is changing, you are taking a decision either to invest in that security or get out of that security, and you are making that decision. You have price sensitive information, you are analyzing it on a financial security, the impact of that particular price sensitive information on the financial security, you are analyzing it, and then you are evaluating the risk and reward based on that analysis, and then you are taking a decision. So this very broadly, this is what is meant by security analysis. Now let us actually look at the definition that they've given. It broadly covers the aspects that I have mentioned here. Security analysis involves a systematic analysis of the risk return profiles of various securities. Okay, what did I say? Systematic analysis of risk return profiles of various securities. Here security need not be share only. It can be a bond, it can be a some kind of a commercial paper instrument or any such kind of thing, right? Any security which is to help a rational investor, okay, which is to help a rational investor to estimate a value for the company, from all the price sensitive information or data, which is to help a rational investor to estimate a value for a company from all the price sensitive information or data, so that he or she can make purchases when the market underprices some of them and thereby earn a reasonable rate of return. So what are they saying here? There is a rational investor who is taking all the price sensitive information or data and he is analyzing it systematically. He is analyzing what? He is analyzing the information or data and trying to understand the risk return profile so that they can make a purchase decision if the market price is underpriced and thereby earn a return. Okay, this definition is basically very specific to being underpriced. There are sometimes when prices are overpriced also. Okay, the price of certain shares or stocks are overpriced. At that time, you take a decision to sell off those shares, right? So that also is part of security analysis. So friends, if you look at someone called Warren Buffett, I presume that most of you know who Warren Buffett is. Warren Buffett is one of the richest and legendary investors in Wall Street in US. So he has a lot of holdings in companies like Coca-Cola, Apple, a lot of such companies, and he invests directly in those companies. If you don't know who he is, I suggest that you do a Google search and figure out who he is, because he is considered as a worldwide stock market guru. Okay, so if you think of a person like Warren Buffett, or in Indian context, think of somebody like Rakesh Jhunjhunwala. Some of you might be aware, some of you might not be aware. If you are not aware, please go and search. And by the way, Mr. Rakesh Jhunjhunwala is also a chartered accountant. Okay. These people do a lot of analysis, or they get a lot of information, they process the information, they take big decisions on investing in company stocks. So when these people make investments, what kind of analysis do they do? Okay, when they take these decisions, what kind of analysis do they do? They, whatever we have learned in FM, SFM, FR, all of this is consolidated and they will take some investment decision. But what is the kind of analysis that they're doing? So typically, the kind of analysis that is done for various securities is split into two parts. One is fundamental analysis, other one is technical analysis. If you look at any of these legendary investors, right, they all believe in fundamental analysis. Technical analysis is more a mathematician's love, or you can call it statistician's love. But if you look at any of these large investors, who are legendary people like Warren Buffett, there are quite a few, Peter Lynch, there is somebody in, quite a few guys, or Rakesh Jhunjhunwala, or his mentor, Mr. Damani, or quite people like that. They all believe in fundamental analysis. Now, what is this fundamental? What is this technical? Let me give you an example. Very simple. I'll give you a simple example to help you understand. Fundamental analysis basically assumes that you can do research about the company and get information. Based on that information, you talk to the management or don't talk, or probably talk to people in the industry or talk to the experts, and then take a view saying that this particular security will go up or go down, whether this business is profitable, not profitable, or whatever. This is the core of fundamental analysis. It believes that you can identify a good share or security. You can identify a good share or security by understanding about the company. Technical analysis, while I'm giving a very broad definition for technical analysis here, does not believe in these things. Technical analysis does not believe that you need to do research about the company, understand financials, what is happening, who's the promoter, what is their background, how is the industry, what is competition. You don't do all of that. Rather, you look at stock prices, you look at the behavior of stock prices, you look at the direction of stock prices, you look at the kind of patterns that are formed in stock prices, and then take a decision whether you want to invest or not. What is this? How can you look at a chart and take a decision? What they fundamentally believe is, all this information is in some form or the other reflected in the stock prices, and hence if you are able to understand the patterns, in the stock prices, you can take buy or sell decisions. So these both are interlinked at the core. At the core, it is a company, and company has some information. The fundamental analysis people believe that you have to research about a company. The technical analysis people believe that no, you need not do so much research. You have to understand the patterns. And once you understand the patterns, you will be able to take buy or sell decisions. If you ask me honestly, a good investor looks at both. A good investor doesn't say this is great, this is not great, because a good investor is not bothered about ego. He or she doesn't have ego that I will follow only this, I will not follow this. A good investor will always look at everything that is available and then they take decisions. So a good investor typically looks at both. However, these are two different schools of thought, or we can say different methods of analysis. One is fundamental, where you research about a company or a company share or any of its security. A technical analysis is more about finding patterns or charts, or how this particular information is reflected in the prices of that particular security. Also, one more point to support this entire technical analysis, right? Technical analysis is actually based on behavioral finance. So if you have not heard this word called behavioral finance, please do a Google search. What is the meaning of behavioral finance? Basically, it says when the prices are moving in one direction, what actually happens to a lot of investors? What do investors do? Just to give you a very, very classic example. Very classic example. Some of you might be aware, might not be aware. This has happened in the year 2020. There's this company called Yes Bank. There's this bank called Yes Bank. Yes Bank was in dire straits. Dire straits means it was not doing very well. It was not doing well at all. The company had a lot of NPAs, the promoters had done some scams, fraud, they diverted money, all of that. There are some court cases going on. So all of that information started coming out. When the information started coming out, the large investors, mutual funds, pension funds, FIS, whoever were holding the stock, whatever price was available in the market, they were dumping the stock. Dumping means selling. They were dumping the stock in the market, stock market. What happened to the retail investors? All the retail investors thought at that point of time, no, government of India will intervene, something will happen, anyway the price is only 5 rupees, 10 rupees, 11 rupees, let me put 1000 rupees in this. So, while institutional investors were dumping the stock, retail investors were buying the stock. Because all the retail investors were not acting rationally. They thought, either it is a bet, or they were thinking something will happen to this, or they were thinking like, no, the price is low, the price is falling, so let me buy. Or they were thinking of weird explanations people will have. There will be a lot of people who would say, no, I bought on that Yes Bank day. Same thing happened when Satyam was happening. So same thing happened when Kingfisher Airlines was going down. Vijay Mallya, for which, court case is going on. When Kingfisher Airlines share price was going down, people were buying, all retail investors. Why? Because they were all behaving in one weird manner. Same way, in the markets, traditionally, what has been seen is all these retail investors behave in one particular manner. And when they behave in a manner, because they all have these underlying beliefs or their own internal feelings which they are not able to gain control over, and they make investment decisions. So this whole entire charting or patterns or whatever you choose to call it has a sound underlying basis of this behavioral finance or behavioral economics. That is how our human behavior affects the prices of various financial securities or any kind of product or good. How does it affect? Right. So there is some sound logic. It is not that, because I am studying CA, the only way to analyze a security is going through the financials. No. The market in which thousands of people are trading, millions of people are trading, it also has, the price reflects certain information. So that is also very, very important. You can never say that, no, all these charts are waste of time. They're all useless. No, you can never say that. You can also never say, no, this is the only way, or this fundamental analysis is the only way to do it. No. If you honestly ask me, both of them are equally important. Both of them are different methods, but both of them are equally important. But in the long run, if you want to make a long-term decision, if you want to make, let's say, 5-year, 10-year, 12-year decision, right? Usually, fundamental analysis is what is more important. This technical analysis, is very short-termish. If you can ask me 1 month, 2 months, 3 months, 6 months, max to max 1 year. Technical analysis does not provide you visibility for, let's say, 5 years. Fundamental analysis provides you this 5 years, 10 years. It doesn't provide you visibility, but it enables you to envision that. So let us say, one new company is coming up. They give you their financials, their projections, they tell you what is the market size, how much they can go, and all of that information they give you. Let's take classic example of Zomato, right? Zomato has been there for close to a decade, and when they came for IPO, they gave all the information. Now its price was not traded in the market. Prior to the IPO day, there was no price reflected of Zomato in the market. So how will you do a technical analysis for Zomato, you tell me? Correct? Now after Zomato got listed, and quite a few other companies are in pipeline and they will get listed. After everything gets listed, then you can do technical analysis and say, the price is going up, going down, do some chart, do some pattern. But before that, when the price itself is not listed, how will you arrive at a technical analysis? You have to only go by fundamental analysis. And people who invested initially, when Zomato was reaching out to venture capital investors, or they were reaching out to, people, PE investors or very large investors, what chart, what pattern? Everything was primarily fundamental. What is the growth possibility? How does it expanded? All of that was all fundamental. So if you honestly ask me, technical analysis is slightly short term, max to max medium term. It is definitely not long term. Fundamental analysis is always available across all three terms: short term, medium term, long term. So now we've got enough context of what is fundamental analysis and what is technical analysis. We've also seen the definition. Now let us dive straight into fundamental analysis. What is the meaning of fundamental analysis, or what are the types, or what are the various aspects involved in it? Let's get into that.